Hey, it's Bobby, and we're back again in part 5 of my Same as Ever series. And today we're going to talk about things that just do not compute, and specifically why Bitcoin just won't die, and some things that must be considered. There's a lot of things in this world that don't make sense, and for some reason, the unknown just keeps happening. It defies logic, and this is quite confusing. The one thing we can't spreadsheet is the human element. There's so much in this world that we cannot quantify, and today we're going to specifically talk about that. A man by the name of Will Durant once said, "Logic was not created by the universe, it was made by man, and this is why it is defied so often. If you expect the world to operate in logical ways, you're going to find yourself incredibly frustrated." And this is one thing the standard financial world just fails to understand. Their ways of measuring things based on cash flows and their logic of how to derive value of something has been completely flipped on its head. The financial world is built around beating inflation, where you take your capital and you deploy it into something. Now, we're not talking specifically about starting a business, we're talking about investing into 401k, stock market, buying stocks, and you value companies based on cash flows. Whatever money it's making today times what you believe the future will bring. Will there be growth? And this is how you create a valuation of a company. Well, with Bitcoin, the one thing that's true is there are no cash flows. What is true is we know there is a fixed supply of 21 million, and we know that every 4 years there is a halving event, estimated every 4 years with the 10-minute block time. This decreases the supply. The one thing that investors really can't grok and wrap their mind around is why Bitcoin has value. People call it a pet rock. Jamie Dimon, who was Jeffrey Epstein's banker, calls Bitcoin a pet rock. He's not impressed with it yet. He's one of the custodians who helps BlackRock manage their Bitcoin ETF, which is a story for another day. But legacy financial actors have a very hard time understanding why Bitcoin is so meaningful. We tend to either forget or are not aware of the fact that every fiat currency dies. Any fiat currency that a central planner or issuer deploys out into the world typically fails within 25 to 26 years, meaning they inflate the money supply and create more, therefore destroying its value, and a new one must be made. And as it relates to the US dollar, we pegged our money to gold years ago, and every country pegged their currency to ours. In 1971, we depegged from gold, meaning our currency was no longer tied to the production of gold, which has a very extreme cost and a tremendous amount of work that goes into mining gold, which obviously proves that it's scarce, it takes work, and it's hard to get. And now that we're not pegged to gold, it's very easy to create dollars with a keystroke.
And there is an infinite amount of cash at the Federal Reserve,
Like we saw in 2020, we made tons of dollars and it circulated around the world, and look what's happened in the last few years, tremendous inflation, cost of goods going up. So with Bitcoin, the one thing that's certain is a fixed supply of 21 million. There's no one who can change the code and create more than 21 million. There is no one who can fudge with the 10-minute block time and 10-minute transactions, and there's no one that can change the halving event that happens on estimate every 4 years, where the supply being issued into the market cuts by half. Let's take a jump into a little story. A man by the name of McNamara helped Henry Ford process and go through improving the line at Ford Motors. He tried to apply this logic in Washington, done via spreadsheets and statistical modeling and projections, and it did not work. It failed miserably. In the Vietnamese War, we would take out 10 of their people and we would lose 1. The American people did not care about the 10 that were lost. They cared about the 1 that we lost of our boys that we sent to war. And the Vietnamese said something interesting. They said, "We may lose 10 and you will lose 1, but you will be the one who wears down first." You can't statistically model this, and this is what's unique about the world. We cannot put people into a box. We are driven by emotions, we are driven by our circumstances, and how we all personally choose to handle and model risk. The Vietnamese clearly were ready and willing to lose 10 to take out 1 American, because they knew that by us losing 1 person, that was a greater impact to our mindset and our culture as a country than them losing 10. They had a lot more to fight for, and they were willing to put up anything to protect it. One of the most impossible things to measure in the world are people's mindsets and how they approach and manage risk. This must be remembered. Jeff Bezos has a pretty cool quote that's very relevant to this as well. "When anecdotes and data disagree, the anecdotes are typically right." And this is frustrating for a lot of people because we love to model and forecast to manage risk. But this is one of the biggest hiccups when managing risk, when we disregard the anecdotal data and we lean primarily on something that's easy to quantify. It makes us feel comfortable at the end of the day. You know, if you can measure something and then make a decision from it, you feel confident in your decision. You can rest easy at night. But this has proven to be wrong in so many circumstances in history. One other drastic change that has happened in the last 70 years is how scientists measure athletic performance. It used to be based purely on athletic ability, and this has completely changed. It's not about what people are physically capable of. It's now about how much a brain is willing to endure pain based on the risk and reward. Those who are willing to endure pain and do whatever it takes are the ones who usually win. It is not always based on athletic performance, and that's been proven true in history when you hear and see these stories of athletes that have incredible grit, commitment, and a level of pain threshold that the average person is not willing to push through. When investors become so confident in their data and models, that's when problems arise. It's the same thing when it comes to friendships. We expect people to act a certain way, and when they don't do that, we act bewildered or confused. We're emotional people. We are all driven by different incentives, and there will always be risks that we cannot project or forecast and understand. If you leave no room for the crazy, dumb, and unexplainable things, you're going to find yourself frustrated. And this is what's so interesting about Bitcoin. People have constantly said over the years, oh, Bitcoin's dead, or it's never going to have value, this, that, or the other. And time again, it continues to survive, it continues to thrive, there continues to be more adoption, there continues to be more venture capital money coming into it. And now we are at a point where there is a Bitcoin ETF, many Bitcoin ETFs on the publicly traded stock market, and it's becoming an allocation percentage for the largest money manager in the world, as well as pensions and 401k accounts. So this really encourages folks to think deeply about why. Our assumptions about value are completely wrong. Our assumptions about what is money is wrong. Our assumptions about what people deem valuable and what should or should not be valuable is wrong. You see all of these talking heads saying one thing and the market deciding the other. This is what's wonderful about free market capitalism. In a free market, companies and things can easily fail or succeed. When it comes to subsidies and socialism and the ability to prop things up that you want to prop up, like the government does, it doesn't allow the free market and the purchasers within those markets to buy and elect with their dollars what they want to see. And luckily, what we are seeing today in the world is more people are buying and holding Bitcoin. You can look at on-chain data and see specifically those who are smaller holders are growing in every day. And over time, those who had large amounts are slowly selling off. The money is becoming more distributed to people. And it's undebatable because Bitcoin is a publicly open, transparent blockchain. It's a distributed ledger where anyone and everyone can download and verify the source code and see this information. As long as you have a computer and you can compile this data and run it, you can see this as well. I believe that we are going to continue to see so many of these people with financial models and ideas of how they see the world is going to be completely flipped on its head. And again, some of these bankers who have a lot to lose, like Jeffrey Epstein's banker, they are going to say that Bitcoin has no value. I don't see a place for it in the world. But what's fascinating is it allows us to send money anywhere on this planet with no middleman. We can stream money now. And the most fascinating thing I believe right now with Bitcoin is that we can give AI agents autonomy and allow them to pay each other for compute and bandwidth. If you've used any type of AI, you know that right now they're very general in a sense of trying to answer questions, and they're very not accurate, or they're just kind of scraping a bunch of text and then compartmentalizing it and putting it out into like a answer. There's no general intelligence yet. But what's going to get us closer to that is having specialized and compartmentalized, very intentionally focused AIs that have an expertise in one area. This will allow the acceleration and the value of AI to increase. Now, how do we give AI the ability to do this? Well, it's going to be giving them the ability to pay each other for compute and to borrow information from other specialized AIs, bring it all together to create what we want as business people, as individuals, as corporations, whatever it may be. And this is going to be a major way in which Bitcoin is adopted that is not on the radar of most. But I'm going to digress. I appreciate you tuning in for part 5 of the Same as Ever series. We'll be diving in again next week. And remember, a lot of our assumptions about money and how society will function in the future are wrong. And this is a great practice and opportunity to realize everything doesn't live in a spreadsheet. And if our assumptions about the world are not being molded by and expecting the crazy and unexplainable, we might have a bad time. Please like, subscribe, comment. I appreciate you. We'll see you next week.